Okay, so right now the weekly is kind of bearish on Nasdaq, but I'm not too fussed about it. Now we only have a few more days left before this month comes to an end, so you have to view this entire structure as a bullish structure going forward in the month of November. What I mean by that is we started the year in January over here, right? So that's the monthly low. Then the low of February, and then there was the low of March. We had a breakdown in April, which took out the lows of February and March. That was stubborn. And then you kept on going higher. So basically, the invalidation for bullish market structure became this low over here. And as we pushed higher, we had the Japan yen carry trade blow up, which had a deep spike over here. We didn't take out this low, however, which made this as the new invalidation as we push higher. Now, this is September month, the low of September, and this is the low of October. Now, November, theoretically speaking, is one of the strongest months of the year, and we also have US presidential elections, which will be happening next week, just like one day before I'm supposed to leave for New York. So I won't be able to do any live streams while I'm there. Maybe I'll do one live with Jeff if he wants to do it, but I don't think we're going to have time to do it when I'm in New York. So we're going to do maybe one more live stream just before the elections on Monday. Um, but the way I see structures in the market at the moment is that this monthly candle is supposed to close in 20 hours. We're not going to break the low of the monthly candle at 19,645 like tomorrow. Microsoft already is down like 5% on the day, and Nasdaq is barely flinching. So that basically tells me that Microsoft is going to recover, and it's going to catch up with where where Nasdaq is sitting at right now. Now, the key thing to realize is that Nasdaq is very, very close to new all-time highs. So that is where my target goes for this push going into November. But I think we're going to squeeze up quite hard and not just like stop there. We haven't quite started expanding on this quarterly candle. It's still sitting very flat, which shows that there is indecision in the market in terms of where the market wants to go. And the only decision the market is waiting for is the presidential election results, which will be happening next week. So once the presidential election results are out of the way, I kid you not, there will be a massive short squeeze rally. I'm not talking about a crash. It doesn't matter who gets elected, whether it's Trump, whether it's Harris. Whoever gets elected will cause the market to rally because they both are for deficit spending. They both are going to be pumping money into the markets. So the market, regardless of the election result, is going to rally. But the thing with a major risk off event, like a major risk event in the market, is that the market likes to hedge going into these events. And when they hedge, they basically buy a lot of VIX option calls. Like they basically buy up the VIX contracts, which causes the premiums to go up in the market. And everywhere across the board, you have massive, massive premiums building up in the put section. Like people are buying puts on their investments. They're basically hedging their investments in anticipation that something's going to happen with elections, which they are not aware of. But the reality is that it doesn't matter who gets elected on November 5th. You would still have the rally happening in the market because they both are for pumping money in the markets. So once the election results come out, all these hedges which the people have bought in the form of puts, they will be closing those hedges, which would cause like a massive short squeeze rally in the market. Okay, so that's my general base case going into next week. So if you want, you could actually take 3 weeks out option calls on a bunch of stuff. Microsoft will be one of my hot favorites because it's gapping down at the moment, and still with Meta. Um, but tech would be my definitely high favorite going into post-election period. which is November and December. So yeah, so I think that's more so my gameplay with how I want to play the markets. So I'll go into the details of what I think is going to happen in the markets going into next week and which contracts or which plays we should be positioning for the next 2 months. So right now, my thinking is that with this being the October low, like this low was formed basically in 1st of October, I can definitely see a very proper 1, 2, 3, 4, 5 like this. So right now, what's happening is that this was an ABC. And over here, this was a 1, 2, 3, 4, 5. Okay. So that is the LA pit down at the moment from the October low. So what we're doing at the moment is we broke the way for higher low. I am thinking that we're undergoing like an ABC correction in the form of this. And I think this ABC correction is likely going to finish by the time election is supposed to happen next week. So the C wave should be printed ahead of elections. I don't think the bottom is actually printed on the election day. But you would be witnessing a short squeeze rally unfolding as the election results start coming out. So that is the game plan going forward for next week. I would be concerned if this low gets taken out, which is 19,645 now, because that would be very, very bearish in the market, as you would be breaking below a major monthly low. Like this low is likely set in stone because we will be closing the monthly candle in about 20 hours. So I would not expect that this low would be breached tomorrow, which means that you will be closing the monthly candle like this. So next week, if the market sells off on election day and you go for this low, that would be a big no-no. You don't want to see that happening. So going into previous election cycles on how the market has responded on the month of November, we're going to do 2020, we're going to do 2016, we're going to do 2012, we're going to do 2008, then 2004, 2000, 1996, and we're going to see what the market does in the month of November. This is your 2020 election month. You had a massive, massive bull candle, roughly 12% rally in NASDAQ. Then let's go to 2016. June, July, August. This is November. So November, I know the market is printing like a doji. Let me show you something. See this candle? So you had a spike down, and it basically got bought back the next day, and you had a 7% rally on that. That was the important part in the market. And then you had a pullback, formed a higher low, then you kept pushing higher for the month of November for a 7% rally from this bottom specifically. Okay, so, but the thing is, elections were on 9th of November, so you still had quite a bit of time going into it. Like it was roughly, how many trading days is that? So the month started here on Tuesday. So Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday. Wednesday is when the elections happened. You had a spike down overnight, and then it got bought back up, and you were well on your way from there. And we basically never returned back to that level. So that is exactly what I'm expecting the market is going to do going into January or February after the election results are done with. Anyways, point being that this was a bullish event as well when Trump got elected in 2016. But this time around, I think the fireworks will be quite significant if Trump gets elected because the market is going to start pricing in tax cuts. It's just that the market didn't know back then if Trump was going to be implementing tax cuts. It's when he took office in January 2016 and 2017 when he introduced the tax cuts policy, and that's where the market really went hormonal. And you can see how the market basically behaved for the entirety of 2017 when the tax cuts were implemented. So this is where the year opened on 2017 January, then February, March, April, May, June, July, August, September, October, November, January. Oh, sorry, December. So the way I'm looking at the market at the moment, I'm witnessing similar pattern like this. Well, you see this compression, right? Yeah, this one big move, then the next move kind of had a follow through. The next move is like kind of dull. It makes you think that the market is weak, and then comes the October month, and you basically have a massive breakout going into the year end. Sorry, the month end. So you see this sideways price action. This sideways price action is basically what the market is printing at the moment. I will show you what the sideways price action looks like, and it will resonate quite heavily. All right, so back then, I remember people were pointing out that this was a rising wedge of some sort, and you would be breaking down from a rising wedge like that. Yeah, like let's say you were looking at this market structure in front of you, and it was looking evident that this is kind of heavy, or maybe it's strong, or maybe it's heavy. The only thing you got to realize is that the market structure was high, low, higher, higher, low, higher, higher, low. And then it's going for like a higher high. And even if you started like pulling back, that was a higher low. And then going into October end, you had a massive squeeze, which kept pushing, which was a breakout out of this rising wedge. And the market did not want to return back. Make sense? So this is what it looks like when you're trying to short a raging bull market, which is printing some kind of a consolidation. It's a consolidation, sure, but it's not a bearish consolidation. It's not a bearish pattern, especially when you're making that pattern going into a very strong bull fund. Okay, so that was back in 2017. The reason I'm pointing out towards what happened in 2017 is because that's when the tax cuts were implemented, and that had a very profound impact on how the asset prices performed from 2017 all the way till here. This is where the year ended. So if you just sort of like bought in January and sold in December, you would be up quite a bit. Like this is one of those years where you just can like buy option calls in the start of January for like December end and just keep riding them up till like the year comes to an end. Okay, so I'm not suggesting that something similar is going to happen with the coming year. But I'm saying that the market was not anticipating that the tax cuts would be implemented, and it had a very, very strong impact in terms of returns, even in the uh, asset classes. Like it's called asset inflation. That's what it's going to do. It basically racks up more deficit spending, and more deficit spending basically means more returns in the market. No, it's just Trump who will be doing the tax cut. Like Harris will do other kinds of spending. It's not going to be the tax cut one. She will like increase the deficit, like for social security programs, just like how Biden has been doing in the past 2 3 years with the infrastructure bill. Like there's other kinds of spending too, which Biden administration has done, like the Inflation Reduction Act and all that stuff. Just printing money and giving it to the people. Harris is all for that too. So we're gonna see that happen in the next 4 years if she gets elected. Trump's gonna do the same thing, except he's gonna be doing it for these small cap companies. He's not gonna be doing it more so for the middle class people, I would say. Like he's gonna do it for businesses, like small cap businesses, homeowners, or mom and pop shops who want to basically further their business. He would be printing money for them and giving it to them, and they're gonna be basically pumping that money into the economy and taking stuff out from there. So both parties would be like causing inflation to go up, and inflation goes up, meaning rates are gonna go up. Rates go up, meaning dollar will go up, which is the dollar index. And if rates go up, that means bonds go down. Bonds are down, it means, well, bad things for the economy eventually. Well, we'll deal with it next year. We don't have to really worry about this year. We're just going to look at what's going to happen with the election for the next month or so. So this was December 2016 when Trump got elected, and then let's go to 2012. This was 2012. We had a mild panic attack in 2012 that there would be some kind of recession. However, a lot of people, I also was talking to one of my colleagues on how the atmosphere was going into the 2012 election. A lot of people were calling for the market to crash, that it's just going to go down, nothing's going to survive, and if Obama gets reelected, it's doom and gloom and whatnot. And Obama did get elected back then. It was in November, around November 12th. The market went down briefly, but all I could see is that it took out this liquidity pool sitting inside this order block coming down, and it's rejecting it going to the second half of November. Yeah, a massive, massive squeeze after that. Okay, so this was a buying opportunity going into the elections. Then obviously this uptrend kept going into the year end, and then it started going sideways as the new year started, and we witnessed further upside as the year went on. So that's the first presidential term after the elections was done with. But for November month itself, you had a bullish November month, and the returns for that November month came in the last 2 weeks of November month, not the first 2 weeks. Okay. Then let's look at 2008. 2008 November was the great financial crisis time, so this November month had a very, very severe impact. So I would discard this. This was like an anomaly. We were already in a recession, so the market was not actually gaining momentum because of whatever's going to happen with the elections and whatnot. It didn't care as much. So I would not actually care much so much on what happened in 2008. Now let's look at 2004 in November. 2004. or here. So October was a bullish month. November here, that was a 7% rally in Nasdaq. Not a lot, but it was a bullish month overall. Let's look at 2000. 2000 was a recession year as well. The market was in heavy recession as the tech bubble had bursted, which was seeing massive downturn happen. I don't know if it bursted near the election or after. It bursted during the election, so that was a bearish year too for election season. The tech bubble had just started bursting back in November. So let's look at 1996. Now this is what's more significant of what we're experiencing at the moment, that you're in a massive uptrend in the market, like as it's going forward. So in an uptrend, where's 1996? November. This is more like it. Yeah, 11% rally in Nasdaq. So that is something which I would be expecting with the market. You had a heart attack in 1996 July, sideways in August, breakout in September, sideways in October, further push up in November, sideways in December, strong January, pullback in February, March, then you continue going higher going into the summer. That's like that's how an uptrend should look like. That's the template of an uptrend, where you're making higher lows, healthy pullbacks, higher lows, going into uptrends like that. So 1992. That's also a very strong month, 8% run up on the month. So, needless to say, that if you're not in a recession and the market is like in a healthy uptrend, you would be witnessing at least 8 to 12% rally on the entire month for November. So, one of the ways on how you could play the market for November month is just take call options for like November 29th expiration on letter right out. So, which call options would give you the best bang for the buck? That's the next question to ask. Would it be Apple? Maybe. Yeah, you could do it, Apple. Apple is kind of showing me the signs of an ascending triangle of some kind, especially when you look at this level. Like this level basically gets derived by this high over here. And then you connect it here, like that. Now you may think that this is kind of breaking down, but it's not breaking down, trust me. This is not what a breakdown looks like on an ascending triangle. It's just sideways at the moment. That's all it's doing, and it's just being annoying as fuck. So on the weekly chart, this is sideways, sideways, sideways. And until this weekly candle doesn't close, we don't have any indication whatsoever that the market actually wants to go higher. My thinking is that the expansion on Apple to the upside is likely going to start next week when the earnings is out of the way and Apple announces some kind of a super dividend or maybe some kind of a stock buyback, which they generally do. Like that's in their DNA. Let's go out tonight. Now, if you look at the 2-week chart on Apple, This is a bullish order block, and I'm seeing this pattern develop across the board as well with the 2 week candles because we will be closing this 2 week candle in 1 day 2 hour, 1 day 20 hours. Now it's kind of tricky. The monthly candle closes tomorrow because tomorrow is the 31st, and the 2 week candle closes this Friday, which is the 1st of November. So the new month's expansion is going to start on Friday, but it will still be part of this current 2 week candle. All right, so which is why I'm wanting it to do its time. Like, let's say if earning comes very strong and they do something crazy, and the stock gaps up like 5% and starts pushing, it goes to like 244. This 2 week candle could completely change on what it looks like at the moment. So I'm not wanting to say that this will be like a inside 2 week candle at the moment because we have earnings on tomorrow after close. But I could definitely say what the monthly candle is going to look like, which is this, that you would be seeing the monthly candle close like that, and you would be wise to consider that the low of the month will be here. So this is the low of the month. So if the market is like doing some pullback, you will be measuring the pullback from this low. All right, so my thinking is that Apple is doing an A, B, C, D, E kind of a pullback. Like it's going to take out this low. It's going to go for these lows too. And it's going to likely fill this fair value gap over here. So it will run these lows out. Maybe going to tomorrow, it's going to do it. And then it's going to fill this fair value gap and it's going to come deeper in here. So you would still be taking the Fib from this low to that high on 0.618 or 0.705. That's generally where the market is going to go to before rallying higher. But this low at 221 should not be broken down. We should be staying above it. Also, a word to the wise, Apple has not seen any upward movement on this quarter at the moment. As in, this is an extremely bullish chart, don't get me wrong. Apple has the most fantastic months when it comes to November months, that is. Like, I have never ever seen Apple do like a bad November month. It's just like it's the holiday vibe. Like people like to give other people holiday gifts, which are like Apple products, whether it's laptops, whether it's iPads, whether it's iPhones, whether it's AirPods, whether it's some service subscription, whether it's Apple TV, a Mac Mini, you call it. Holiday season means go to Apple, buy like a very premium product, and make your family happy. That has been like a tradition for the past 10, 15 years on how the market goes forward with I bro, people ask me that I'm like a salesman for Apple. I'm not. It's it's generally the case. It's the trend in the market. That's like a social um it's a social norm because Apple has like such a deep root within how people live their life. Now, people may not like that why people do things this way, just like it becomes like a religion or like it becomes like a political affiliation. But regardless of your political affiliation or religion, everybody loves Apple products. Like there's nothing wrong about it. So that is something to consider with our dear Apple stock at the moment. Now, Let's look at what has every monthly candle done in Apple. This is a sideways month, obviously, so we're gonna have to view it as such. Apple had a late start to the year because Apple kept going down since January started. January, February, March, April. It was down quite a bit because nobody knew what AI would be doing. But I was very, very certain that it would be going higher. Why? It's because of this pattern on the quarterly chart. What's the pattern? Inside quarterly candle failure. Yay. So when I was looking at this inside quarterly candle, and then we looked at the weekly candle, see that? Where it's making you believe that it's breaking down. That feeling, that voice comes in your head, you're wrong about the market. It's bearish. Apple is going to hell. Apple is going to go back to zero. It sucks. Its products suck. You should not be investing in Apple. When that voice starts creeping in, that's exactly when it's going to bottom, which it did. And you would be sitting there holding a giant dildo in your hand thinking, what the fuck have I done? Why did I not buy Apple back then? When it's like pumping precipitously, going to new highs without even giving you any pullback. And at some point, you're also probably thinking that while this push is happening, that maybe, just maybe, this is a rising wedge and it should break down because, the market structure is bearish. It's a lower high being printed. The market should be coming down because it's a lower high. It should be making a lower high. Why should this company be going higher when it's not reporting the best of the revenues? It's reporting a loss on its quarter. But what they forget is that Apple is a master in financial engineering. Like they have maybe PhD sitting over there studying these kind of chart patterns, studying what kind of market sentiment is revolving around, basically knowing when to strike into the market to cause a massive, massive short squeeze. And they have been doing it for the past 15 years. And they know how to deploy the capital very, very effectively, which other companies just do not. Which is also one of the reasons why Apple is such a valuable company because they have a brand to maintain. They're not like influenced by local stock jockeys, which are trying to assess what Apple's going to do in the next 2 years or 3 years. Like they are the juggernaut, which of the entire American economy. Like if Apple were to fail, the American economy is going to fail. Like so, if you're trying to bet against Apple, you're betting against the American economy, and I'm not saying that it's a wise thing to do. So at the moment, what I think Apple is doing is it's consolidating. Yeah, like this was a consolidation over here, right? What happened after the consolidation? It basically broke out and it's like pumping higher, like that. So that is more so my thinking what Apple will be doing with its earnings as well. Now, is it going to be a gap up or a gap down? I have no fucking idea. But I would be saying that just don't bet against Apple going into November. That is with holiday sales, they do very well in November. And let's say, for example, uh, take a look at what has Apple done every November month. Last November, I recall, this was a bearish month in November 2022. We were in a recession. That was 2022 was like the entire year was a very depressive year for stocks. Look at this November month in 2023. You had a massive, massive push. Oh, 13% push in 2023. 2021, 12% push again. Yeah. Then look at August, September, October, November. What happened in November? 12% push. Look at 2019. 8% push. Look at 2018. This was when we had a crisis where the repo market blew up and Apple and every other mega company was crashing going into October, November, December. That's an anomaly. 2018 was like a mini recession period where the rate hike caused like a turbulence in the repo market. Then November 2017 was a 5% push. August, June, May. November 2016, that was a down month. It went down by 7%, so it's down by 3%. That is when Trump got elected as well. So that month was actually bearish. It's just that most people also don't realize is that Apple was recovering from its own mini recession, where it was down from 2015 to like 2016. So for almost a year, Apple was down. That was a recessionary period for Apple in itself. Look at the 2014 November month. It's a 10% push. Are you feeling it yet? Like, is it hitting you that it's a stock which does very well in November? This is November 2013. It's up 8%. So 2012 to 2013 was like a mini recession period, as I had mentioned before. In this case, this was a down month in November, but we basically had a massive buyback too, with a giant wick. If we go on 2011, that was a down month too. Wow, 2011 was down. Okay. 2010, that was an up month. Not up by much, but it was an up month. Hmm. 2009, that was an up month too. This was 08 crisis, so November would be bearish, yeah. So look at the November month here. Basically, price retraced the entire October month's candle, went all the way down, and was brought back up. So that bounce by itself was 18%, but it closed the candle bearish. Now, the thing to realize in Apple's case at the moment, this monthly candle will be coming to a close in about 19 hours, right? Which means that when the earnings comes out, earnings will be received after close on October, but the price action will be reflected in the new month. So I would not anticipate that the earnings should be pushing price down below this monthly low on Apple. And if we are to use the quarterly candle estimate, this quarterly candle should start expanding at some points, and November is generally the month where Apple should be expanding to the upside, right? Do we agree or no? Or you still feel like I'm just like a salesman for Apple? They better pay me like big commission. Let's go out tonight. Now the thing is, Apple should expand. I feel like the better opportunity is in Microsoft instead. Because when you look at the quarterly candle, Microsoft had a down quarter. Last quarter was a down quarter for Microsoft, which is making me believe that it's this is like a one, that's a two, that's a three, that's a four, and that's a five. Now if you use this low on Microsoft like this, take a fib like that, and you're doing like a fib retracement from this low to the high, that's a perfect defense at the 50% level, right? And since then, it's been like defending the 0.382 as well. Now, even if we're gapping down, price is sitting at about 415 at the moment. It's still above the macro SR levels. So I'm not too concerned about the overall structure for Microsoft. Instead, what I'm thinking Microsoft is doing is, since this bottom around there, this was like a 1, 2, 3, 4, then this entire thing was a 5. And we basically retraced the entire move down, where if you look at the retracement, it finished exactly at 0.618, which basically means that this was an ABC correction against this 1, 2, 3, 4, 5. And once that ABC correction was done with, we started a new impulse up where this bottom was like 1, 2, 3, 4, 5 like this, where the wave 5 is like very, very strong. If you go deeper, 1, 2, 3, 4, 5, yeah, that's a proper 3, that's the 4, and the wave 5 finished over the gap up. Yeah, that's good. That's a proper 1, 2, 3, 4, 5 up like that. Now, after that, this was an A, that was a B, and this entire thing was a C. How do you map that out? I have no idea. The only thing I know is that this is an ABC down. And after that, this entire thing is now an ABC up as an ABC, where this is a 1, that's a 2, that's a 3, that's a 4, and it should be a 5 like this. Now, I was looking at the price action for Microsoft when the earnings was gonna come out. There was initially a spike up. It took out this high, and then it started selling off. So in my opinion, this wave C finished right there, and then you're seeing like a proper downturn happen. So from here, that's a 1, that's a 2, that's a 3, that's a 4, and the earnings spike was a fifth wave up top. And so it makes sense that it's like projecting the way it is. It's a wave C finishing right at the top, and now it's coming down to like take out these lows. Now it could come all the way down till this level. To fill this gap. It didn't fill this gap when it was falling down over here. For some reason, it just wanted to go higher like that. It was very absurd that it did that. So it could come and fill that gap tomorrow, and it would still be bullish. How? Because I would be counting on the market to do a bigger A, B, C like that against this 1, 2, 3, 4, 5 up. So in grand scheme of things, I am thinking as long as you defend this low, sorry, this low, which was made by ABC, which are mapped in red, as long as this low is defended, the $400 low, you can consider this entire thing as a ABC correction with the C wave is going down with the gap down, which is even better because once the reversal starts happening and it starts going higher, the reversal can just like go up very smoothly. Like it will be like going through hot knife through butter because gaps get easily filled when you have like a gap happening. So instead, what I should be doing now is taking shorter dated option calls on Microsoft tomorrow when the market opens. When I say shorter dated option calls, I'm talking about at least going to like November 21st or something, where the market is going to be poised to rally higher. And you could buy like 440 option calls on Microsoft. Now, trust me, Microsoft has to rally if NASDAQ has to go up. They both go hand in hand. You cannot go the other way when one market is like going higher. So when you look at the price action structure by itself and you're not considering LFA, this is a weekly bullish order block. So if you're coming back down to retest this low, boy oh boy, that's a very nice entry because your stop can be just right below 400, which is the invalidation level, right? And we were sitting at 416 at the moment. So you are re-entering the bullish order block, and I am counting on Microsoft to start expanding to the upside and go for like 468. So tomorrow, if you have like a gap down in the market, I would be opening option calls which end in November, and I like those option calls will be for 440 strike November end. They should be pretty cheap. I don't think they should be like expensive enough. Like say for example, at the moment they are MSFB MUSFET. Okay, let's go out. Okay, so 440. When the market closed over here at 432, 440 calls were setting at about $12.50, which will be dropping heavily tomorrow because well the stock is going to be down by 5%. And if we open at 416, 416 to 440, that's like 25. So they should be sitting at about like even the premium should be coming down because at the moment the IV is kind of elevated. So it's hard to say, but I think they should be coming down to $3 something for 440 for 440 strike when the market opens tomorrow. I think that's a very good risk reward ratio. You could be looking at almost 10x on those option calls if you take like November and expiration on Microsoft, because the election result by itself should be causing a massive squeeze in the market, and Microsoft should be participating in that squeeze along with every other company. That's the only way on how Nasdaq is going to go up. Like Nasdaq is not going to continue going up just because Nvidia is carrying it. And at some point, Microsoft has to pick up the slack. And I think Microsoft will be targeting the R2 yearly pivot by the time the year comes to an end. So by December, and I have the target of about 490 on Microsoft. Fun times, right? Fun times ahead. Sure. Ask away. I'm just gonna buy on the gap down, bro. I don't care much about the because the gap down is gonna open at about 416. It will have a snap up instantly when it opens. I don't think it's gonna sit down for too long. I could be wrong though, but that's the game plan I have in mind. So I would put in like another 10% of my portfolio in Microsoft for 440 straight for November end expiration. Because the risk reward ratio is really good on Microsoft. Yeah, so that's for Microsoft. I don't even want to talk about NVIDIA. It's setting an R5 pivot. What should I do with that? There's nothing I can do with it. I don't want to long it over here. Sitting right at all-time highs. Especially when you look at AMD. AMD got obliterated. I probably should have bought puts on that. Like I was looking at it in hindsight, but this is such a nice short when it was getting there. It filled the gap, the open gap over here. Look at that, 0.705 tip. And then boom, drop the hammer. Which was also happening as price was going into this 2 week bullish, 2 week bearish order block. Went deep into it, or rejected. Now see, the thing is with Microsoft, the setup is actually bullish. Like I said, inside 2 week bullish candle failure. So if it comes back down to 416, you still have Friday, and Friday could actually squeeze higher after the earnings day is done with. So you could still be closing the week at 432 because of Friday being the juggernaut in terms of the new month opening on Friday. So I would not discount Microsoft doing like a U-turn when it opens with a gap down tomorrow. There is a pattern in play which I want to discuss with SPY. That's the multi inside 3-day candle failure. So initially we had this 3-day candle which printed a failure, but then on top of it we printed a new inside 3-day candle, and it is printing its own failure. Where now it's an inside 3-day candle, a new one, and we should be gapping down because of Microsoft's earnings and Meta's earnings and going for this low. So Apple should be joining suit and going down again. So I would expect that SPY is going to go and take out this low, and you should be taking a fib from this low to the high, and anticipating that SPY comes here to 0.698 fib. Now don't get scared when it comes there because it's going to come down in force. You just gotta have the balls to buy it over that. So that's where I'll be like trading my futures position, wanting to open a long position over here and SPY. Or if you want to do it in QQQ, not SPY, because QQQ is more stronger in general. It's making higher highs and higher lows. My God, gold. Gold is like supremely bullish. It had an inside weekly kind of failure. And that's what happens when you have inside weekly candle failures being printed in a hormonally bullish market. You get even more squeezes out of it. So yeah, that's gold for you. I cannot say anything about it. You just trade with the trend. Adobe. It's filling this triangle out. And I think with Microsoft's earnings being reported, it should be pushing down and filling the gap. If it fills the gap, I think it's a well worth it for a long. But I would not take up a long position myself personally because it's not an index mover. And if it's not an index mover, you should not be positioned in that for the year end. The only positions that you should be taking, which have like good setups, say for example Microsoft, Apple, um, Google was a good setup. Like I already discussed that. So that's what happens when you have a very good technical setup where I could see that there was an open gap sitting over there, and the setup was going into this inside weekly candle failure. And with this inside weekly candle failure, you had a massive pump because of earnings. Yeah, that was my inclination that they would time this open on Google exactly with this gap fill, and that is exactly why I exited my position because this was my target, and it delivered. So I'm happy that it did. But I think it's just gonna go sideways now. It's kind of done with its movement. We profited off of it. Congratulations if you took it. So I'm gonna have to move that capital around and do something else with it. Costco is being a bitch. It's not behaving well. But yeah, the technical setup is what the technical setup is. You should be staying above this red line. It should not go below that. At the moment, we have an inside daily candle. So we'll see how tomorrow unfolds. I think it's going to take out this low. But if it rejects from there, we're going to make an inside daily candle failure. We're going to take it from there. I think you need to be long Tesla on this pullback. If this pullback brings Tesla down to fill this gap, that's a motherfucking long. It's a very strong long position because in my opinion this is a very strong higher low which is printed in the market. This higher low because the market was attacking the previous week's low. It attacked it for the first time, then it attacked the second time, and then had a massive squeeze. So in doing so, it's created this bullish order block here in this weekly candle, where this down weekly candle is a bullish order block now. So if it comes back down to fill that gap, I would be seriously considering taking a swing long position in Tesla. But I've mentioned this thing before, this SL level which I mapped out at 265, that's the Great Wall of Gandalf. It's like, you shall not pass kind of a moment whenever Tesla gets there. And which is exactly why I was not wanting to long Tesla going into that level. And I think it could go sideways for some time. However, consider this for a moment. If Trump wins, for the next 4 years, Tesla is the best investment you can have because Trump is going to sign waiver after waiver after waiver to give like tax credits, tax breaks to every Tesla product being made for the next 4 years. And Elon Musk will be benefiting a lot because of that. So forget about what other big companies are going to be doing. It doesn't matter what kind of technology they're printing, but they will have the full support of the Trump administration behind Tesla. And where the political capital is flowing, that's where you need to be positioned as well. And Tesla's already doing like great things. Like I know the technology is like very sound. It's very um, revolutionary. Like they're transitioning from being just a car company to a very advanced AI and robotics engineering company. So my only issue is that if Trump does not win and Biden administration comes back in, which is like in the form of Kamala Harris, they're gonna go after Elon Musk. Like they will be binding him in down in courts, like doing lawfare, trying to muzzle him, trying to take X away from him, and they will definitely ruin his career. They will ruin his life, and that's enemy number one for them. Because Donald Trump is done after this election. He's not going to run for re-election if he loses, and he's just going to like sail into the sunset. However, Elon Musk is like still pretty young. He's like 53. He still has like another 30 years worth of political capital in his hand. He can like use that. So they want to like eliminate him at every cost if they come back in power. Which is why Elon Musk is like he knows the risk, he knows the consequences, but he's still like I know what at stake, so I have to like give everything I have to like make sure this doesn't happen. Because if it does happen, then the country is kind of doomed, and I don't want to see that happen. So that is more so where he's coming from, and I think most people or Tesla investors, they are just like in a wait and watch mode to see what happens with the election results. But I can tell you already that the market structure in Tesla is suggesting that the market wants to go higher, which means that they are just waiting for that right catalyst to come along. And the market structure break happened over here, where you took out the lower high at about 265. And that's the SR level I've been talking about. You've been banging into that SR level, like it was like first tap, second tap, another third tap happened. If you look at the daily chart, see that first tap, second tap, third tap. That is the epitome of a head and shoulders pattern. Like this is the head. Sorry, that's the left shoulder. That's the head, and this is the right shoulder being printed. So now the sideways pattern is probably going to extend because of elections and whatnot. But the moment Trump comes into office and he's thinking about tax cuts and whatnot, he's going to give like a big fat tax cut to Elon Musk companies, and that's where Tesla bulls will be like coming back raging and wanting to buy this. So like I would be positioned on the wrong side on Tesla for the entirety of the 2025 because of Trump being in office, if he wins, that is. So here, for example, this has been the bearish order block, which has been capping the market. That's the first tap, second tap, third tap, fourth tap, fifth tap. Now I'm just waiting for this 2 week candle to close. If the 2 week candle closes like this, you will be looking at a 2 week bullish order block being printed. On that 2 week bullish order block is all I need as a trigger to long the market, which I think the market is like positioning for a Trump victory, where expansion is going to happen to the upside again on Tesla going into the next 2 weeks. That's where the next 2 week candle will be printing the expansion for the month of November. So that's more so what I'm leaning towards on Tesla as well. And I think Tesla is in that category where it could easily be pushing like 10x from here, and you could be setting a $2,000 mark in the next 3-4 years, because it has been going sideways for so long that it has all the energy, it has all the ammunition behind it to go up again. Because this year has been relatively sideways. It had a down year. It spent like half of the year, like 1 year was down year, second year was like recovering from the down year, third year is basically going sideways. The fourth year is where the real expansion is going to happen to the upside. And I think we could be looking at something similar like this 700% run up in 1 year if Trump gets into the office and he does what he should do to help Elon Musk. So it's a strategic partnership for both of them. Like Elon Musk is gonna help him drain this farm, and in return, he's gonna like do a lot of good things for Tesla company and his other companies. Which gap are you talking about in Tesla? We're not gonna come down to fill the gap. I don't think so. I mean, that is some heavy bullish movement in Tesla after elections, after the earnings event went down. So I don't think it's gonna come down to fill the gap. No, it's a daily candle, by the way, in Tesla at the moment. So I think it should be opening with a gap down, but that gap down is likely going to get bought back up. So you should be printing like a higher low on the daily chart. Yeah. But you need to see the election results first. Don't jump to conclusions. Yeah. Basically, new all-time high by July next year. That's the leap I would be entering. I can't breathe. Okay, I think that's pretty much it in terms of what I wanted to cover with the markets. And we'll see what Microsoft does tomorrow. And we'll take it from there. Okay? No worries. Good night.